Welcome to TradeNBI.com. This is John's Reporters for the 28th. I know I'm a little giggle there. We were talking about this and the risks that were associated. Number one, we had the positive extreme. We knew we were going to be coming back to that point. We had done it once before right here, but just on a brief touch before it popped back up. I was talking about the systemic risk that existed as we moved into these areas where returns were going to become exceedingly difficult when you're at these valuations. And then sure enough, we started out the morning with rejection spider, classic. We were already in declining red DSC. Though we had cyan dip below red for just the briefest of moments, which was a good indication that we started to pop up from it. But then once the selling started, it began. And a lot of this is related to what's going on in some of these other more esoteric things like, GameStop and these short runs and that, while that's getting all the attention, you have some underlying other problems. You have the energy situation, which is changing with the new administration and the restrictions on that. That is going to create some inflationary pressures, coupled with continued lockdowns in certain states. They're real trouble signs, and then you have the divided Congress, so it's going to be harder to see things getting resolved that way. And they're also looking now at the likelihood that stimulus is going to be far more reduced than the anticipations were, because you have gridlock, which usually is good for a market, but no, the market has been anticipating more and more Fed activity. And from an NQ standpoint, it was the stronger of the two going into all of this, but we'd seen that continued decline in short-term buyers, which makes it tough to keep going. It had been quite successful, but once the selling started, it was a quick turnaround and change from everything. We had a dip below the red line, which meant that we were likely to retest that low for the NASDAQ, which was the 12,884. But we had, discussed that you had positive extremes that have been filled before, but there are other ones that go back a lot further into the early part of last year. But even still, we talked about this low right here, 13, having to be filled back in. And sure enough, that's exactly what they did. From a Euro standpoint, again, we pointed out the problems that they were having, and that's just a continuation of it. And of course, with this kind of selling, the prospects for inflation, not as bad as some would think. Restrictions are certainly going to do that, but when you have lower economic activity, it becomes a wash at that particular point. Plus, and this is something I pointed out before, gold tends to have difficulties in big sell days because a lot of people will liquidate a position to cover long positions in that. Let's get right to the 5K because it was such a long day. So we started out with our early morning short signals that came in on DSC spread. We had that beautiful little spider, and exactly what has happened in the daily construct, and that fall of the power mode 2 below 13.5. So they coordinated together, and that led to a nice precipitous decline that came all the way through. We had several P2s, but again, this is where I look to at least that dip below the zero within that 5-bar range before you get the dip below orange. But in this case, look at that shakeout well below the negative 13.5. So it wasn't until we go much further along that you ended up with that setup right here. It did create a little bit of a pop, but literally it was an immediate. There where we had the crossover, green going below, steel crosses, orange spikes, the usual. And it came after that rise of the gold where we started to flatten out. And that's something I talked about before. And of course that led to a precipitous decline. Well, it was pretty good all the way from the exact algo level right there, right around 38 all the way to 37.60 after having already had the huge decline from before. Rallied back again, but again, this is where that falling 100% line pulled it up slightly, but it wasn't until we ended up with that secondary dip that it actually really caught fire. But you had green over to the cyan, along with the move of Power Mode 2 back up to 13.5. It had still gotten very close to positive extremes at this particular point, so once they started popping up, you literally created new levels. I didn't even need to add them because they were almost identical to the previous ones, which just lets you know that they picked these particular values and they stick with them. Just because they're not related to standardized, retrace values and stuff like that, which makes them more powerful and more unique. Further along, came through, did the exact same thing, and then produced another cell configuration and several of the steel dips here, but you couldn't get the orange to fade underneath. And when you finally did, you did it where there was no steel reset. Now, certainly when the green crosses over, that becomes attractive, but it's crossing over at the exact time you're getting positive extremes. That's usually a weak inflection point for me. I usually look for that as additional short potential, and then we continue to go all the way across, just moving lower. It is one of those where I just tend to start, once you get caught in a wave, I just follow the 100% declines, and you can stay out of a lot of the noise. It just depends on how big a range you want to play and how active you want to be in the setup. That just becomes a preference at that particular point, which makes the Morgan actually very helpful in that standpoint, because you can use it as an additional stop, or again, sticking with the tighter long-short algo. Those just become preferences at that particular point. And so right as we get close to the end of the day, we ended up with a spike move down here. You had the now it's below zero, but in this particular case, you've got to have the move back of steel above zero and coming back before you're going to get the orange dip, which will give you what you're looking for. And I'm usually looking between 5 and 6 bars maximum from that time. So it's just a matter of, that 1, 2, 3, 4, 5. And you're like, okay, yes, that's reasonable. What I would be looking at right there is once the gold started up and you're in that positive configuration with the in this case, P2 and P3 pivots moving forward. So there was a lot of build in that one, and that shot us back up. But below the red lines, this one had been filled. Let me just clean DOC spread. It actually started a little early right here, and you'd already had gold flatlining, and then boom, DOC spread continued across. There were actually a couple of potentials right here where steel did back, but no support from the orange. And then it did it again there. This one actually was decent from a buy configuration, but it didn't last. You ended up with that green rejection right when the green should be passing, and that becomes a critical element. Now, if orange in this particular case dips down underneath red, then yes, a new potential buy setup has occurred, but just fantastic stuff. The ranges are beautiful. Just about to finish the incorporation of that steel setup, which will reflect in the Diokon Paint 2, which I think that would be an exciting add for everyone. Makes it just that much cleaner. You won't have to think about it because the colors of the chart will change accordingly, and that will be pretty sharp. But for the fun of it, I would go ahead and show this is 60-minute of the continuous Bitcoin, going all the way back from early part of the year, and just following where those short, long setups are. I mean, some people ask, well, can I trade, the NBI using other things? If it's a futures market or if it's a market with decent liquidity, the algorithms are going to be active in it, and when they are, we're going to see it. In this particular case, with Bitcoin, the last short around 34,000, you can see with no steel reset until just right about now, nothing to do. You just sit there and wait, because it's going to continue to trail down. If orange continues to fall down, that would be the potential for a new buy round, but as of yet, no. particularly when you have rising gold and you're in a weak spot. Not particularly what you want, because that's going to be showing a trend to the downside for it. So it can be very effective, whether you then want to trade on the smaller time frame or anything else. And this same thing occurs with options. And I like to use the at charts that are the dailies and or any interval in between, and then you can trade the individual security accordingly. I thought I would throw this one in because GameStop obviously has been the thrill of the recent market moves. And you can see, the earliest buys came around in the 30 range, but there was a whole host of them in between. Let's just have a 15-minute chart because it's sometimes easier with some of the lower traded stocks in this particular case. And clean and simple. I mean, from the buy that it had there, or even at the 85 one, below the red line, no real change from there. DLC spread that came in this particular case, not all that exciting because you're doing so with that full still reset and just basically easing off of the general move. But you're getting to a point where, you've got positive extremes that go all the way right back to that original 85 move. Now, will it happen immediately? This is sort of like the Tesla story as well, where there were plenty of down moves in between it and filled in a lot of them. You tend to get some individual stocks where their momentum can last extended periods more than a mean reversion market. So that's something to bear in mind when you're looking at stocks. You need to have your clear sell signal. And in this particular case, now that the shakeout's below 15, and I think that there probably will be more activity from a downside potential than upside, simply because once you start to get that in, particularly if you move towards the zero, I think then you would start to see a complete fillback of a lot of this. And it's just a matter of, you can make short squeezes happen in the near term for a while, but eventually you kind of decide, is there a justification for the value that it's been given beyond just the speculation part of it? And once that wears off, and it will, then you get a mean reversion. Like case of Tesla, when you continue to have government contract subsidies and support, the potential is unlimited there, and so that allows that to extend even further. Plus, the move into the S&P forced all the funds to have to buy stocks in that in order to be equally balanced for those. So that's also a bonus. But again, those things wear off as well, because it's an interesting one when you think about it. Practically being worth more than all the other automakers of size that are selling units at considerably higher margins and bigger volumes, and yet their valuation is far below that of Tesla. So it's the idea that Tesla is going to own the entire market, which is now possible because the government's talking about now moving to all electric. But the question will be, will the other companies that have moved into that electric field start to get some of the share of that, which is most likely to happen. But neither here nor there. It's just a matter of following what the algos are doing at a particular time, and it just points out what I've always said. It's not always about what you think value is. Sometimes it's about the imbalances and looking to where one side can take advantage of another side and utilizing that. So I've gone along here, but a lot of interesting stuff taking place in the market all of a sudden here as we go into February, which are notoriously weak. So that also adds an interesting factor to it. Off about 35 as we're talking here. So trade well. We'll talk again later.